The moment we've all been waiting for. Evergrande has come back online. And what was the result? Well, I want to tell you exactly what happened, why it happened, all the details inside and out. My name is David Quintieri, and what I do at this channel is I take all of this really complicated financial stuff and I make it easy for everybody to understand. In today's video, we're going to look at Evergrande, their other competitor, Country Garden, and all of the real estate that is involved in this, how this affects you no matter where you are in the world. And I'm going to tell you what you should be aware of, staying away from, but also what you as an individual need to do. How does that sound? Let's begin right here. Evergrande shares fall nearly 90% as creditor talks are postponed. This is important because we have seen this for a while. It's been dragging on. I've been talking about the fact that they've halted the stock for such a long time. It feels like forever. And now today they brought it back online. As you can see, it didn't end up so well for the stock, but this was the assumption that this would occur. It was simply a matter of halting the stock to postpone the blow, which was eventually felt, because you can't stop an idea whose time has come, right? Once it goes, it goes. They knew it was going to happen. It's just a matter of time. And so I want to cover a few points about this. I'm going to give you the ins and outs of it. Number one, Evergrande stock resumed trading. We have Contagion that goes beyond real estate, all right? Which industries do you think are impacted? Can you guess? Well, if you walk through this video with me, you're going to get that information, how important that is when we're investing in other companies, maybe in commodities and other things. I'm going to show you, okay? Problems go into the financial sector, not just inside of China, although yes, that's a huge factor, but abroad as well. Globally, this is getting real serious, okay? And then at the end, I want to talk about what you as the individual need to watch out for, what you've got to do as a result, because we're talking about one of the biggest companies out there in this game. And there's not just them. There are others basically in the same situation. After a 17-month trading hiatus, Evergrande's trading resumed only to quickly become a penny stock. There you go. One of the biggest companies became a penny stock just like that. And you see 2017, suddenly out of nowhere, the shares start going up like crazy. They're bidding it up. Oh my goodness, this is the next big thing. It's going to be so great. Yes, it can't lose. More money is being thrown in. Oops. It came down and down and down and down. It's because we've got to watch and pay attention that it really understands, like, for most people, they don't grasp that, yeah, I get it. There's a reason why the stock went up. And you could say, oh no, more people are moving in. And oh, look at their sales, look at their revenue, look at their profits. But if it doesn't make sense, it doesn't last. That goes for any stock. There is a point in time. It could be next year. It could be 10 years. But it always reverts to the mean. And when that occurs, people get punished and they lose their shirt. Evergrande loses $2 billion valuation in value as trading resumes, extends creditor voting. You could see it here just saying that they're delaying this. They're trying to figure it all out. Oh dear, what are we going to do? But of course, they're not going to be able to pay back anybody. But I wanted to make this note right here. The stock has been suspended since March 21st, 2022, and resumed trading after the company said that it had fulfilled all of its conditions by the Hong Kong Stock Exchange. So that's why it came back online. I want to make that very clear. It wasn't like, the government just came in and just waved their magic wand. They said they fulfilled the conditions. They come back online and they got crushed. Okay. And so I think it's part of a bigger thing that's going on right now. The central bank, the government, they're trying to do everything to stimulate at this point here. And perhaps now they're going to be looking at getting some additional funding, some sort of bailout. Who knows? I'm going to watch this very closely, but we have not seen, through all this time, we have not seen a formal bailout take place. Just remember that. It's been collapsing for a while. This has been going on, and there has not been a bailout yet. They haven't said, okay, we're going to backstop all the losses, we're going to nationalize it, we're going to do all this. That hasn't happened. There's been actions. They've done things, certainly, and they want to calm the markets. But they have not gone out and just formally said, we are going to take it over, like something like a Fannie Mae, Freddie Mac situation. That didn't happen. So we've got to realize that. And a lot of people don't, they say, they're bailing it out, ha ha ha, and they make it seem like that's okay. It's not. Okay, there's a lot going on here, and we need to understand all the little nuances, or else we're simply ignorant to it all. The previous trading session to the one you're watching, China's 5.5% stock rally fizzles in a blow to the market rescue effort. So initially, the stock market goes up after coming down quite a bit. Stock market goes up, it's up like crazy. And then what happens? End of the day starts coming down, and then I believe the intervention took place at the end of the day. But what I see here is a wild ride right now, and they want more stimulus, and we'll talk more about that in a second. But we got to understand the overall theme that's going on inside of China right now. It is a slowing economy. The global economy has been waiting for China's post-2020 economic boom, but that has never materialized. And the opposite could be well playing out, with analysts saying that this serves as yet another reminder for Canada to wean itself off of China. At issue in China's bloated property market, which by some estimates makes up over 25% of the country's economy, at risk of commodity prices, which had been given a long-term boost from the overbuilding of real estate. This is huge. Two things in there. You've got Canada that is exposed. There's no question about it. A lot of countries are exposed to China and potentially considered to be overexposed. You've also got the 25%. I've seen numbers of 30% of the economy. So what do you think happens if that suddenly reverses? And also the third thing there is that we have commodities that have been, imagine to build an entire city from scratch. You need a lot of stuff. You need the concrete, you need the copper, you need all these different commodities to be bought up in mass quantities, and equipment. Caterpillar, like all these different companies are going to, get the benefit of that. Semiconductors, everything you can think of. And so they need that stuff. Let's build that stuff. They're using the workers. They've got relatively cheap labor. Let's bring it all in. Let's build these things. Oh, 2020 comes, and now suddenly we don't need as much of that stuff. Here we go. Global economic slowdown as a result. People are begging and praying for the economy of China to collapse because they see these two rivals. They're going to go head to head. Oh no, it's China versus the US. Look, China has this insatiable appetite for all these commodities. Now you squash that down, you've got a global slowdown that's occurring. And that might be a good thing because it could slow down inflation on a wide scale, but jobs are going to be lost. That's a fact. Jobs are going to be lost, okay? Here we go. The next shoe to drop. Evergrande's liquidity crisis was just the beginning of the pain. Other large retailers in China have since defaulted as they struggle to shore up cash, and demand for housing has fallen. Now, investors around the world are watching nervously as Country Garden, which employs some 300,000 people, missed 2 payments on its multi-billion-dollar debt, and it was considering various debt management measures. Okay. Very high risk, according to Moody's. This is important. You look at this on the whole. I've been covering this issue for years. I did, many videos recently about Country Garden, about Evergrande, about the whole, the local financing, debt financing vehicles that are at risk right now as a result of all of this. There are so many pieces to this puzzle, and I've been breaking down each and every one of that. I want to thank you for being here. If you want to know all about that, I think that it's important to stay tuned, hit that thumbs up button, and hit that subscribe, because then you're going to get all the latest and greatest. I only bring you the absolute most important information, and I'll forego all of that, which, quite frankly, is not real key. So I hope you'll stick with me here as we look at this. You've got issues all over the place right now, concerns about domestic real estate. You've got stability issues. Canadian real estate is what they're saying a safe haven. And the whole point about this is that if suddenly, China's not as investable for whether it is going to be somebody in China, inside of China, or maybe somebody abroad, well, then, what they're going to do is they're going to look for a place to park their money. The issue that I see with the Chinese actually investing abroad is you've got capital control. So there's only so much money that they're able to bring outside. And if they figure out a loophole, there's these police stations that are available everywhere, whether it's in Canada or the US or anywhere, that might take care of some of those people getting around those circumstances. So I don't think a lot of that money is going to be able to leave to go abroad. Okay, there are restrictions, capital controls, and so on. So I think that stagnation could be very likely, but they're going to have to put their money somewhere. They're going to put it in the banks over there. I don't know. Maybe with Hong Kong. We'll see. You want to know who is impacted? I thought this was interesting. Ashmore doubled down on Evergrande debt as others hit the exits. Now, this is from 2021, but it was interesting to see that this particular company, this asset manager, they bought more of their bonds as this thing is collapsing, thinking they're getting an opportunity. This one company, they made a big mistake. But that happens in the investing world. And everybody, I mean, you can't win them all, but this one was that must be painful. Okay. The mostly empty $100 billion city rising from the sea. And this is interesting because it shows us, by the way, the developer's Country Garden in this case here. But I just want to show you an example of the things that happen. This is a southern Malaysia off the coast. And they just get into all the details of the things that they tried to do. It's half built. They didn't get to what they wanted to do. You can see it for yourself. I mean, it looks nice. Looks, you got a whole bunch of villas over here. You got the skyscrapers over there. Could have been nice, but unfortunately didn't get to the place that they wanted to. They were supposed to house 70,000 residents. They claim that it's more like 90,000, if that even is the case. But I'm just trying to show you that these properties are not necessarily all inside of China. It does affect elsewhere too. Keep that in mind. Okay, it's not just inside the borders. Now, it might be close by, but that's the point. Now, here we go. China Central Bank trims 1-year rate, but unexpectedly leaves the 5-year rate unchanged. What this means is basically all the different stimulus measures that they've been trying to do. I'm just trying to show you the actions that they have taken. This one, China makes first tax cut on stock trading since 2008 to boost investor confidence, doing anything that they can to stimulate wherever possible. Okay, so you're asking yourself, what do I do? What do I not do? Well, who should I watch for? It's not just a matter of, okay, I'm just going to not invest in Evergrande. I'm not going to invest in Country Garden. Hey, I'm good. Not so easy. Okay, let me tell you. Number one, lesson learned for everybody, even if you'd never bought into these companies at all. Even the giants fall. Keep that in mind. US Steel, look at this company, how important. And now could disappear. You got to realize that. And that's why you cannot put, no matter if you think you're a hero and you see all these YouTubers, I'm going all in on Tesla. You don't want to do that. I mean, if you don't have much money to invest, you could take that risk. But it's not prudent. It's not prudent to do that. And if you see, yes, you can take a handful of names, but you got to know when to pull the trigger. You got to know when to sell too. And most people don't. They think I'm just going to ride it out until I see some YouTubers telling me to sell. That's not a good idea, okay? You got to know when the time is right. And we can talk more about that in future videos. Understand that one change can destroy the valuation of the company. So look at the tech industry right now. Look at AI. It's basically unregulated. If they start to bring in regulations, that could have dramatic effects on the valuation of these companies. So keep that in mind, okay? Watch regulations from the government. Of course, if you are subscribed to the channel, you will know exactly when that happens, before it happens. Understand how income is derived when you're looking at a company investment. If you're getting into an investment, whether it is something like real estate or whether it's a business or whatever, look at where the actual income is coming from. Okay, that's I I know that it kind of makes sense, but just think about it a little more clearly. Is it, as I say here, be mindful of hope? Oh, we intend on getting this percentage. Or is it actual reality? What are the facts? What can I prove right now? Because Evergrande really screwed up, and a lot of investors were going in thinking they were going to be rich, but that is unfortunately not the case. I wanted to highlight the comment of the day. Here we go. Well, first of all, I wanted to note this. What is the most important thing you want to learn in 2023, 2024? I can't help but notice this. It is like practically evenly distributed amongst the three here. Okay. And just so we know, everybody's listening, there's a lot coming for the Money GPS. Okay. A lot coming. So I'll follow up in a later video. I wanted to cover this. Thank you very much, Stevo, for your comment. Aside from the poll, one subject I think would be great for you to cover in detail is what BlackRock is intending to do with their $10 trillion. Yes, I think we've got to cover that. We got to look at BlackRock, we got to look at Vanguard. These two companies have massive influence, and we want to be aware of what they do, any changes, and so on. I'm going to bring that to you. I will do so. At the same time, I want everybody to be joining over 1,200 people. I didn't realize how fast this grew, but now over 1,200 people that are inside the Discord. Okay, so this is unbelievable how fast it's growing. And here we are. Discord is a thing, like, think about it like a chat kind of, but I can do all kinds of things. I got the video of the day constantly going in there so that you can actually get notified. And you got tips and strategies and things about the money mirror method are in there. And I'm going to put a lot of Compass, which is another thing I'm doing soon. That's going to be in there as well. There's going to be so much stuff. There already is so much, as well as the fact that there's 1,200 people that are like you that are chatting every day. So get on in there, click the link. It's free. Click that link in the description, and I'll see you over there.